at least for the 9 months, our non-interest income actually grew 30-odd%, right? And this came from particularly wealth, from our global markets, especially on sales, right? And of course, investment banking, right? So again, with our customer base, right, we believe that we can do better in penetrating our customers beyond just lending. And that is a significant uplift on ROA, we believe, ROE.
All right, Carol, we'll have to leave it there. Thank you so much for your time today. Carol Saleh Ramli, President and Group CEO at Maybank. Of course, we're coming to you live from the Malaysian Economic Forum, the first one they're hosting to take stock of what's happening in 2024 and also to set the agenda, the priorities for the year ahead. Paul, handing it back to you.
All right, thanks, Taz. That's our Chief International Correspondent for Southeast Asia, Linda Amin in Kuala Lumpur. The latest stories now that we're following from around the world. Uncontrolled wildfires still burning through parts of California, fanned by extreme winds. The fires have killed at least 5 people, burned some of the wealthiest neighborhoods of Los Angeles County, and forced tens of thousands of people to leave their homes. The disaster could be among the most expensive in U.S. history. Unions representing U.S. dock workers have reached a tentative agreement with port operators for a new 6-year contract, avoiding a possible strike. The two sides will operate under the current contract until the union and port employers can ratify the terms. Nearly 200 large union contracts are set to expire this year, covering more than 1.5 million workers across multiple industries. Australian rents jumped about 7% in the December quarter. That is, though, the slowest pace in 3 years. While nationwide prices reached a new high, the pace of growth is easing due to increased availability. Moderate rent increases are expected this year, helping put a Reserve Bank rate cut in play sooner rather than later. The Chinese government has pledged to deepen its anti-corruption drive across a broad sweep of industries. It's a sign that President Xi Jinping's campaign against corrupt officials will roll on for the foreseeable future. The nation's graft watchdog ended a 3-day meeting by singling out the finance, energy, tobacco, pharmaceutical, sports and construction sectors, as well as state-owned firms. Heidi.
We have seen that increased support when it comes to China's support of the yuan, as the yuan continues to head towards the policy red line. But it's not just a yuan, although it should be feeding off some of that EM weakness as well, as sort of vice versa as well. We've seen that pressure on the deepening EM FX sell-off there. Broadly, we're seeing emerging market assets falling on Wednesday. Increased bets on a more hawkish Fed, concerns over President-elect Trump's tariff plans and further geopolitical tensions there. The MSCI EM currency index dropping about 0.3%. Most developing economy currencies are looking weaker against the dollar. Stocks also falling, snapping that 3-day gain. And really, it is sort of awaiting clarity on a Trump administration 2.0 policies. There's a lot of favorism for the dollar at the moment as a haven amid an increasingly unsettled outlook, and of course just the dollar exceptionalism, Fed and US economy exceptionalism that we saw play out through most of last year there as well. So we could expect to see a further sell-off going into the inauguration on January 20th there. We did have that report that President-elect Trump is considering declaring a national economic emergency to push through his tariff plans. All of that is just adding to even more investor concern.
Well, let's take a look at LG Energy's shares slipping after the company reported a surprise loss of 225.5 billion won. The expectation was for a narrow 16.3 billion won profit. So a shock loss reported there in the fourth quarter from LG Energy. Also reporting there a miss on sales, but that operating loss coming as something of a surprise. LG Energy shares down more than 2.4%. More ahead on the Asia trade. This is Bloomberg.
top names in business are on Bloomberg.
The question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are, and that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together. We got to realize that the impact we have if we don't get this debt back in line.
Nobody covers business like Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Whatever the administration ultimately decides, we'll give them as much insight as we can from our perspective, and I'm sure that the administration will make the right moves that's in the best interest of our country.
NVIDIA CEO Jensen Huang speaking with Bloomberg a little bit earlier this week. And of course, since then, we have had really this final push in the last days of the Biden administration to limit NVIDIA's AI chip exports. We're hearing that the plans are to impose new restrictions on these artificial intelligence chips, really aiming to keep these advanced technologies out of the hands of the likes of China and Russia. So these so-called sort of 3 tiers of chip curbs, with a small number of allies having unmitigated access, and then sort of gradually becoming more restricted from there. Let's get some analysis now from Bloomberg opinion columnist Catherine Thornberg, who thinks that the US needs to clarify the links between these consumer tech companies and national security. Catherine joins us now with more. So, you know, there's a huge lack of clarity in terms of some of the decisions that are being made. Is that what concerns you?
Yes, Heidi. So I think if you look at Tencent, which was just added to the Pentagon's blacklist, you know, we don't have any information about what exactly its links to the Chinese military are. And we've sort of seen this show before. I mean, when Xiaomi was added to the blacklist back in 2021, they sued and they eventually got themselves removed from the blacklist. But the evidence that came out against it, the ties to the Chinese military, were that it was investing in 5G and AI, which pretty much everyone's doing. And also that its founder had won a sort of government-linked award that so many other entrepreneurs had won, including the makers of sort of a chili sauce brand. So I think when we just throw around national security so broadly, it sort of starts to lose its meaning. And I think that the U.S. government would be wise to really be a lot more strategic and clear about what it means there.
So is Tencent going to be able to pull this off? Is it going to be able to get itself off that Pentagon blacklist?
I think so. I think, you know, like I mentioned earlier, as we've seen with Xiaomi, they were able to remove themselves from the blacklist. But, you know, the hit to the reputation is already there. And Tencent is another one of those companies that has its arms in so many U.S. firms. So I think when the U.S. is, you know, coming after these Chinese consumer-facing firms, throwing around national security, I think it can spur sort of Beijing's ire, and it doesn't necessarily accomplish a lot, especially when these sort of blacklists don't necessarily come with, you know, actual penalties and sanctions.
So we don't know what President-elect Trump is going to do. Sometimes he does what he says, and sometimes, you know, execution is very different to the campaign rhetoric. But what do you think the incoming administration should do to avoid, you know, a potential race to the bottom?
So I think now is the time to really take stock of what we've already done, how that has turned out, and what our actual goals are with what the U.S.'s actual goals are with this sort of tit for tat that keeps escalating. And I think now's the time to be a lot more strategic. And instead of, you know, racing with America First policies and sort of pushing this decoupling faster and isolating the U.S. more, I think we need to take a step back and think about what we actually want to accomplish, how we can accomplish that, what's worked so far, and not just sort of tick off Beijing and also not sort of make Beijing retaliate more and sort of take this farther and farther until more consumer-facing companies and more consumers and more businesses are increasingly caught in the middle.
All right, Bloomberg opinion columnist Catherine Thorbeck there. Let's take a look at how Asian chip stocks are reacting at the moment. Of course, just to recap for you, the new set of restrictions does create 3 tiers of chip curbs. Those allies that are closest to the US would have unfettered access to chips, and then you keep moving down the list until you get to the most restrictive tier 3, where China, Russia, Iran, North Korea, obviously other such countries would be heavily restricted in terms of their access. The NVIDIA CEO Jensen Huang, of course, urging a go slow on this idea, and it's a bit of a mixed bag for chip makers at the moment. A lot of stock-specific stories going on here, of course, at the moment. SK Hynix, though, performing pretty well, better by more than 3.5% in Korea at the moment. We have more ahead on the Asia trade. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Tariffs is going to be the one that is the most, that's for equity investors, that's going to be the biggest focus because that can affect earnings probably the most severely in growth. I don't think we're going to know about taxes for quite a while. I think tariffs we're going to know quite a bit in the next month or two. If they can execute on all these policies and we can kind of get to a point where the markets get comfortable with this, the second half of the year could be much, much better for equities.
Morgan Stanley Chief US Equity Strategist Mike Wilson there. Quite a bit of consternation as we get into the end of the week. We're awaiting those key US jobs data numbers and how that potentially kind of changes the picture further when it comes to Fed expectations. We are seeing that dip, of course, across Asian shares after Wall Street traders refrain from making big bets. We're seeing that continue when it comes to US futures as well. S&P futures down by about 0.25%. We're also seeing some reluctance to bet big when it comes to Greater China and Taiwan as well. TAIEX futures looking softer. We're expecting to see a lot of the chipmaker and AI and tech-related names reacting to the letters pushed by the outgoing Biden administration to put in place more of these tiered restrictions on access to advanced technology. We're also getting quite a bit of risk aversion, of course, going into China's CPI. The broadly inflation numbers, the CPI numbers are expected to approach zero. We know that factory gate numbers have already been in deflationary territory for quite some time. So FTSE A50 China futures, they're off by 0.2% in that last trade. We have also seen quite a bit of support needing to come out for the yuan as well. So watching China very closely today.
Well, let's check in on some of the stocks to watch when markets do open in Hong Kong and mainland China. We keep an eye on Tencent. As we were just discussing, it's brought back about 8 million of its Hong Kong listed shares over the past 2 days, and this is after the Pentagon blacklisted the company for alleged links to the Chinese military. Chinese property developer Sunac also in focus as investors grow anxious about upcoming interest payments. And in the auto sector, sector, Geely, has announced plans to sell 5 million vehicles a year by 2027. Let's take a look at some of the major benchmarks around the region at the moment. It's a bit of a lackluster day with going backwards in Japan, the Nikkei off by about 0.5%, almost every sector on the index lower. A similar story here in Australia, almost every sector in the red as well, the index off by more than 0.4%. We did just have a very weak reading on retail sales as well. Kospi, meanwhile, just in positive territory by just a few points. We did hear from LG Energy earlier announcing a shock operating loss. That stock off by more than 2.5%. That is it for the Asia trade. Markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen.
Order partially filled. Order partially filled.
Joe Walk is helping steer J&J into a new phase of its history, expanding the frontiers of healthcare by discovering drugs and advancing medical technology.
Developing digital robotic capabilities where it's not just the robot doing a surgical procedure. It's garnering information from that procedure for your specific demographic or the patient's demographic, and then informing the next procedure down the road. Right? It's getting smarter. I would say it's starting to morph into personalized medicine, which we know will lead to the best outcomes.
Innovative medicine and medtech are run as separate business divisions, but in the culture of research at J&J, they interact.
If you look at some of the spaces that we're in today, specifically oncology, there is a lot of dialogue going back and forth. I think it's something that will position us extremely well as we talk about not only a continuum of care, but also a continuum of knowledge.
The convergence of technology and medicine is driving innovation in both sectors, with scientific and commercial possibilities just beginning to come into focus.
I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal-making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, I can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I think we're ready. Ready? Go.
Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
We're half an hour from the open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Rebecca Chung-Wilkins with David Ingles.
Let's get to your top stories today. The Biden administration is set to plan further limits on AI chip exports from the likes of NVIDIA in a final salvo against China's tech ambitions.
And Asian stocks dip while bonds are under pressure as traders look ahead to Friday's U.S. jobs report.
MSCI China benchmark index, of course, meanwhile, is close to bear market territory and mounting economic headwinds. You have consumer and producer price figures due this hour set to show deflationary pressures persisting.
And to that end, China is also pledging to deepen its anti-corruption drive across various industries, including finance and energy.
Good morning from Hong Kong. Welcome to the show. Equity markets, as you can see here to my right, are under pressure right now. 0.3% is the pullback, broadly speaking, across the benchmark. We're pulling back about 0.25% S&P futures. Of course, keep in mind, the closer we get to sort of the jobs report, the more conversations we'll have on really, do yields need to be this high? That's another conversation. But of course, just keep in mind the melt up in yields has really been, at least the last 48 hours, has been really a headwind for equity markets. We are seeing that in the Asia Pacific. Aussie and Japanese 10-year yield. One market that is coming online right now to pay attention to right now is Singapore, pulling back 0.5%, really on the back of, well, the index closed at an all-time high yesterday. Of course, we're watching all things in the UK, of course, following that massive melt-up in UK gilt yields yesterday. At these levels on cable, we're actually extremely close to taking out the low, the trough, back in 2024, that then takes us back to somewhere around the mid-2023 levels, and that, again, a stronger dollar story. Flip the boards, have a look at the setup as we go into the Chinese market and the open there. And, of course, you just saw the headline coming through out of the PBOC. Might have to do, of course, with